Hey everyone, welcome back to your weekly market outlook. This is for the 5th of August 2024. So let's just get into it. A very important week last week. I think there was actually a lot of volatility, a lot of surprises in the market. We'll start with the main ones first, as we'll take a look at the Australian inflation number here. Australian inflation number for the core CPI, it does pull back down below 1%. It's now at 0.8%. So that will probably lead up to this week's RBA interest rate decision. I doubt that they're actually going to be hiking interest rate for this week, so they're probably just going to keep interest rates steady as it is. Now, main event, obviously, Bank of Japan. So we have the tapering schedule. Obviously, it is a pretty tame tapering schedule, but the interest rate hike that came with it, market it wasn't really a surprise because it was actually a day early. It was a 15 basis points hike from 0.1% to 0.25%. Now, obviously, that unwinds a lot of the carry trades that's been going on. We can see on the technicals later on in terms of where the Japanese yen is. It is actually reaching 145 at time of recording. In fact, if I'm not mistaken, we actually dipped down slightly below 145, which is a very significant level for the dollar Japanese yen. Now, obviously, FOMC statement came in. Also, a little bit more on the Dovish side in terms of opening up for further rate cuts in 2024. I don't think there's any objections from Jerome Powell at this point in time. He's actually not denying it. He's probably welcoming it. And, the data that was really damaging here, it's the unemployment rate in America. The unemployment rate went up from 4.1% to 4.3%. The NFP gain at 114,000. It's one of the lowest gains that we've seen for this year. In fact, if we compare the data here, let me just get the number here. The NFP number that was released for the month of March, that was 108. That was low, okay? July's number was 114,000, which was released last Friday. However, the difference here is the unemployment rate. When March NFP number was low, the unemployment rate was below 4%. It was stable at 3.8%. But last week's number, it was a low NFP gain, 114,000, and in comparison, the unemployment rate is already up at 4.3%. It is about 4% and continues to grind about 4%. So it does cause a lot of panic in the market in terms of, yes, whether or not the FOMC can actually achieve a soft landing, or is it just going to tip the US economy into a recession. So recession fears are setting into the market right now. Obviously, we are looking at a run to safe haven, and obviously US dollar is not going to be that because the recession fear is actually in the US. So safe haven assets, safe haven currencies like the Japanese yen, the Swiss franc, both of them gained significantly. Gold, not quite sure about gold here because with all the tensions going on and with all the recession fears going on in the US as well, we don't see a significant gain in gold. So right now, attributing the safe haven run towards the Japanese yen and the Swiss franc mainly. All right, so this week, what do we have here? Australia and Canada is going to be on holiday for today. On Monday, on Tuesday, we're going to have the interest rate decision. This is going to be at 4.35%. This is what the market consensus is. So no change is expected at this point in time. New Zealand unemployment rate expected to pick up from 4.3 to 4.7%. Other than that, we actually don't have anything much more significant for this week. On Monday, we do have the ISM Services PMI, but in terms of the data that we already have, in terms of the services and manufacturing PMI, we do expect a little bit on the softer side for that. But yeah, this week, a little bit of a break before the CPI rolls in next week. All right, let's take a look at the technicals here. This is the Aussie USD. You can see the pressure here on the Aussie USD. Slight improvement, slight gains on last Friday's movement here on the weaker US dollar, but you can see what's going on here. We actually don't have that significant gain on the Aussie USD at this point in time. The positioning for the Aussie USD here is a little bit unique. We do have 23.6% retracement at 65.50. That's going to be our main resistance. And then we have our 66 cents that's lined up perfectly at 38.2%, and then 66.50 pretty much at about 50% Fibonacci retracement that we have here. This is not a final Fibonacci retracement as of yet. We don't have a confirmed swing because price just has not managed to push back up above 65.50. However, if price is able to gain 65.50, then yes, this is going to be the projected retracement that we are going to be using for this week for the Aussie USD. Cause of concern here is that the Aussie USD is now below the Ichimoku cloud, and the retracement, which is a resistance area for the Aussie USD, take a look at all of them. 65.50 at the Ichimoku cloud, 66 cents also at the Ichimoku cloud, 66.50 at 50% retracement, it's also at the Ichimoku cloud. So we're not expecting too much here for the Aussie USD, and considering that the RBA, it's probably going to be more on the neutral stance rather than on the hawkish side. That could actually put a little bit more pressure on the Aussie USD. So this one here is going to be a currency that is actually hard to gain despite the US dollar weakening. Now, next is the Euro USD. And for the Euro USD, we are currently out of that range of 1.0850, 1.09. So the gain on Friday, that was pretty significant enough to push price above 1.09. Now, if we take a look at the stochastics here and the RSI, there's still a little bit more room to go for the Euro USD. So we might see price kind of retrace a little bit. There might be some profit taking happening. Buyers are probably going to be looking at a lower price, but the intent here on the Euro USD is pretty much clear at this point in time. The Euro USD is currently on track for further gains towards 127.2% Fibonacci extension. That's going to be at 1.1, and that's in between the resistance 1 and the resistance 2 on the weekly pivot. Now for the pound USD, we're still on that retracement limits here, pretty much at 78.6%. That's going to be our base. The base is going to be at 1.27. Prices shouldn't drop below 1.27 for the pound USD to recover. This is currently looking good, but we just don't have enough confirmation. Now, price is currently stuck with 1.28 as our immediate resistance. We want to see price push beyond 1.28, and then progressively we're going to be looking at a move back to test 1.2850. Beyond 1.2850, it's a little bit more of a breather for the pound USD there. There are going to be resistances at 1.29, 1.2950, but they're not going to be as significant as the 1.3 resistance on the pound USD. So this is currently on track for a potential recovery on the sterling here, but we are very close to that support area at 1.27. So if you're thinking of going long on the sterling, just make sure your stop losses are not going to be too far away from 1.27, because if we lose 1.27, that's going to take price below 78.6%. That's likely going to lead a push lower, potentially towards 1.26 on a pound USD. Now, lastly, we have the dollar Japanese yen, and the dollar Japanese yen at time of recording here, just dipped slightly below that 145. Now, 145 here is very important. 145, it's the area between 145 to 146. This is basically the last, support that's significant. Now, not denying with the move that we have here on the dollar Japanese yen, post intervention, the Japanese yen has strengthened by 18 yen and continues to unwind further. So the carry trade is currently unwinding, and there are no demands that we have seen. There has been no buyers that has kind of brave enough to take on the Japanese yen at this point in time, and also the potential for recession fears and whatnot. That's leading up to a run to safe haven, and Japanese yen is currently acting as that safe haven, which it hasn't been for quite a while now. So technical indicators that we have here, what do we have? We have severe oversold conditions, but we don't have any confirmation. This is what makes it dangerous, right? Because the RSI and the stochastics can drop below this lower end here, and as long as it doesn't kind of recover, it would indicate the pressure for the trend there is so strong that price could continue to drop even further. So this is a concern that we have here. Number two, we're just not looking at buyers coming back into the market. I think once price breaks 154.50, which is really way up there. Once price breaks below 154.50, we start that carry trade unwinding, and that's basically what we're looking at right now. So are there any rooms for the Dow Japan to progress further? At this point in time, we would say yes. If there's a sustained break below 145, there's actually not a lot of support for Dow Japanese yen until about 140, 141. So that's still a significant gain in the foreseeable week that we have here. And take a look at the weekly pivots here. The pivot itself is located at 149.36. Support 1 is at 143.50, and below that, support 2 is actually at 140.50. So there's actually still more room to go on the Dow Japanese yen. So word of caution here for the Dow Japanese yen, Euro yen, Sterling yen: just do not attempt to buy any of those currency crosses at this point in time. The selling pressure that we're looking at on this currency pair is just so strong. The yen is so strong right now. There was a surprise hawkishness coming out from the Bank of Japan. There was that surprise interest rate hike, 15 basis points. Tapering is going to start as well. The FOMC is going to start cutting interest rates. And if we take a look at the job numbers in the US, it's not looking pretty at this point in time. So yeah, this could add into more Japanese yen strength. So it's not advisable to attempt any counter trades on the Dow Japanese yen, Euro yen, or Sterling yen at this point in time. In terms of whether or not the carry trade is going to continue, it's best to wait for the next 2 weeks until post CPI to kind of figure out where price is and whether or not the whole selling pressure on the Dow Japanese yen is it going to bottom out. At this point in time, we're just not looking at the bottom there. The pressure is still on, so be very careful when trading the yen crosses. With that, good luck to your trades, and I'll see you soon.